Hello traders, Gary Wagner here, just before noon in Honolulu, 6 o'clock in New York. It is Monday, December 17th, 2018, and this is the Daily Report for Gold and Silver. We had a nice, respectable showing in the precious metals markets, with the U.S. dollar providing some tailwinds and buying contributing to the rest of today's ascent in terms of pricing. Gold closed up $8.40 at $1,249.80, that basis most active February contract. Silver also closing higher on the day, gaining about 0.7%. That's about 10 cents, closing at $14.74. Platinum gained over a full percent, a $9 gain at $794.30. And lastly, palladium up about $13.40, closing at $11.85. As I said, the dollar index contributed to about half of today's gains, with that index closing lower by about 0.3% at 96.61 cents. And of course, the big news continues to be downside pressure in U.S. equities. The Dow Jones Industrial Average down over 600 points at its low, closing down 507 points. Net decline of over 2% again at 23,592. NASDAQ Composite also losing tremendous ground, about 153 points, which amounts to a 2.23% decline, closing at 6756. And finally, the Standard & Poor's giving up about 2% at 2545. Traders, no doubt a respectable beginning of the week when we look at gold pricing. On this weekly chart, we can see this single candlestick representing today's action and also the action for the week. It is giving us a pattern that is simply called a bullish harami, and it's a bullish harami, though, after the market has been in an uptrend, which gives it a little bit less weight. However, what is important to me, and I believe most noteworthy, is the fact that today's $8.40 gain put current pricing definitively above this critical level at approximately 1246, 1247, which I believe is going to be a level of support. It is once again a level of support, although it certainly didn't finish that way last week. If the market would continue to rise, though, there isn't really a candlestick pattern that we can easily identify, and that's because for an engulfing bullish, it would have to open below the red candle's box, meaning the open and closing price, and then close above it. For it to be a piercing line, of course, it would have to have opened below this particular price point. And the last pattern in terms of definitive key reversal patterns, such as a three-river morning star, again, you would need to see that open below the rectangle of the prior candle, as well as the close below that to give you a star. So we would get an interesting pattern if we continue to rise. But once again, it is only Monday, and the one thing that I am expecting this week is extreme volatility towards the end of the week, and that, of course, is due to the final FOMC meeting of the year. The Fed will meet on Wednesday, conclude on Thursday, announce whether or not they're going to implement one last rate hike, and then most importantly is going to be the statement that is released and the wording of the statement. And what we're looking for is whether they're going to add that the Fed is going to be sensitive to data specifics in the marketplace rather than having a predefined set of dot plots or interest rate raises next year. And traders, that brings us to our daily chart. When we look at our daily candlestick chart, we can see that definitively today's move was substantial. As I said, it moved us above the 0.50 retracement level. And right now we have minor resistance, I believe, at $1,258, so about $9 from current pricing, and that, of course, is composed of the 200-day moving average. I believe that that is very minor resistance, and we could easily see this market track above that. If we get a break and a close above the 200-day moving average, that would certainly trigger a buy signal. The only caveat to that is we certainly want to be aware of the increased volatility, the potential for that at least, at the end of the week when the FOMC meeting concludes on Thursday. Major resistance I am still pegging at $1,275, and that, of course, is based upon the 0.38% Fibonacci retracement. And traders, with today's advance in palladium futures up $16 and net gains of gold of only up $8, we are coming closer and closer to those two metals coming to parity or equal pricing. If you recall from last week, we identified on a weekly chart a simple pattern called tweezer tops, and that's composed of equal highs. We can easily see that even on this daily chart because we can look at this high from 2 weeks ago and this high here from last week. They are equal highs. They are just below $1,200, I believe, $1,199 and $1,199.50, but they're within $1 of each other, certainly match the criteria for tweezer tops. They also match where you look for them within a given rally or the given market moves, which has been an extreme rally, almost parabolic in palladium. However, today we didn't get any kind of follow-through selling. If anything, it looks as though we are moving back towards the highs. A break above 1200, of course, would signal some real bullish moves in that market. And because they are all-time record highs, we would need to do something like a Fibonacci extension to delineate where, in fact, palladium prices could go. And we did that a couple of weeks ago. If we see this market break above 1200, we will revisit those numbers. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.